I'm Linda Fox in the Phocuswire studio, and I'm with Roopak Pati from Oppenheimer and Betsy Mule from F Prime. Welcome, guys. Thanks for joining us.
Thank you for having me.
Excited to be here.
All right, so I want to start with startup investment. You know, the last couple of years have been pretty tough out there. What are you seeing? What do you think will, change? Are things going to get any better? Start with you, Betsy.
Yeah, definitely. So I think from the builder side, there's never been a more exciting time to be building a startup, travel tech or otherwise. With all of the advancements happening in AI and with all of the efficiencies that can be gained, and with folks really excited about adopting technology, I think it's a really exciting time to be building technology. From the funding side, you get kind of the flip side. So you're being compared against all of these other broad AI companies that are growing from 0 to 7 in 6 months. And so for vertical specific companies who have this limited buyer set, I think it is a little bit harder to achieve that rocket ship growth. And so the funding has been a little bit more focused on really remaining cash efficient, doing the most with what you have. And so I think that side has been a little bit slower, but we're optimistic and still see some really great companies out there. So hoping that things turn around.
Of course, startups and travel can use some of those, platforms that you spoke about to get to, a better stage, a higher stage quicker. Yep. So is that, I mean, obviously it's a good thing for the startup. How does that affect the investment?
Yeah, I mean, on the investment side, I think it's a little tricky, right? Because you've got all these different tools that have come out and people are looking at them, they're saying this is really exciting, but we don't know who's going to win, right? And there's this obsession with who's going to be the winner. We want to pick the winner, and you'll pick those that are leading maybe, but what I most often hear is we're going to wait and see. We want to see of these 10 different players, we're going to find who the top 2 are and then fund them, which is tough for those startups because they need that funding to really get there. So it's kind of a hard chicken and the egg problem.
It's what we're hearing. Sorry, go ahead.
The other part that's been really tough, especially on the B2C side, is every single time a model releases a new, or a model provider releases a new model, the immediate example that they go with is, here's how you can book travel with it. So travel is constantly top of mind for all of these more horizontal players. And so for these B2C travel specific players to really break out, they're facing not only competitors on the startup side, not only the Expedias and Bookings of the world, but also these more horizontal players. And so just the landscape has gotten a lot tougher out there too.
Yeah, that's a really great point about the travel examples, actually. We hear investors saying that instead of saying, maybe a portfolio of 5 companies that they're going to invest sort of bigger checks in, they're going to maybe invest much smaller checks in 50 companies because we don't know where it's going, and because, as I said, they can get to a certain stage of growth before, they need to invest. Is that kind of the climate that we're talking about?
We're seeing a lot of that at the early stages. Venture has always been predicated on the power law, but also to make that model work, you have to get some meaningful ownership. And so you can do a portfolio model with many, many different companies, but then you may need to make sure that you're reserving enough to double down in the winners. And so I think really planning out your fund and making sure that you're able to do that is the route to success. But also if you're leading rounds, oftentimes you don't want to invest in competitive companies. And so that model also has its flaws. So we're seeing kind of both some very high conviction investors really going for it, but others, to your point, waiting for a little bit more traction, a little bit more conviction.
As we look into 2026, what do you think we're going to see? Are we going to see, lots of, small rounds and seed rounds? Do you think there will be some middle ground? It just feels like there hasn't been that many really big rounds for a while.
I mean, I'm certainly bullish on bigger rounds coming in. I think some of the macro issues, particularly in the U.S., hindered the ability for some of these travel companies to grow this year. We saw companies that were growing 30 to 50% last year reduced down to single-digit growth this year, which made it obviously challenging for funding and for M&A. Now we expect there to be much more clarity around things like immigration and visas, particularly as foreign travelers come to the U.S., U.S. travelers going abroad. And so that should pick things back up, which will lead to better growth rates, which should theoretically lead to more big rounds coming up.
Okay, so maybe the winter is over for travel startups?
Hopefully.
Yeah,
okay.
We all hope so.
Yeah, well, we really do. Okay, let's talk about IPOs. So we had Navan recently. I wanted to ask you, well, we're expecting Klook as well because they've announced. Does the travel industry generally get enough recognition for its value from the investment community?
I would say so. I think historically, though, it's been thought of as an industry with a few very large players and not a lot of mid-sized players, right? And so, if you look back 10 years ago, you'd expect any billion-dollar company to be bought by Booking or Expedia or maybe TripAdvisor or Trip.com, formerly Ctrip. Now, those companies have been very quiet on the M&A front, especially on the large transformative side. And so now you're seeing these companies going public at $1 billion, $3 billion, $5 billion. And so we think that'll continue. I mean, we were fortunate enough to be involved with Navan, we're involved with Klook, and so we're seeing how they're performing, and the market is digesting them, and that'll take some time to figure out where they should actually be valued, because there's always volatility early on. But we have seen a lot of investor interest, and that's why those IPOs got done.
Yeah, Navan is an interesting one, because years ago, Hogg Robinson Group was probably the only kind of big corporate travel firm to be on the market. And I remember the CEO always kind of bemoaning the fact that the city didn't appreciate the value of what he was doing. And I got to ask if that's going to change, specifically around corporate travel.
No, I mean, I think there's much greater appreciation of corporate travel that has now come, right? And there's all kinds of players throughout travel that are AI enabled, but there's been super heavy focus on AI enabled corporate travel players. And so there's been excitement around Navan, but people are also watching folks like Perk. People are watching Engine, right? They're watching these players who've become, unicorns in the space and are very tech forward.
Yeah, exciting. So, AI, do you have to have AI in the name now? Because, I've seen so many companies that 2 years ago didn't have AI in their name, and I'm always a bit skeptical when they suddenly now do have AI in their name. So what do you think as an investor?
Yeah, it's been funny to see the same company, meet them across the years. And first they were sustainability, then they were a blockchain company, and now they're an AI company.
There you go.
Somehow it's all, they're doing the same thing. No, but in all seriousness, I think there is a lot of hype around AI, and with good reason. It is a transformative technology. So much is going to change because of it. I don't necessarily think that your core value prop needs to be AI forward, but you need to be solving a real pain point. And oftentimes the most efficient and effective way to do that is using AI either in the background or in the forefront. And so what we're looking for when we're looking into investments is not just that they say that they are AI, but they are actively solving pain points that customers are willing to pay for, and most importantly, willing to retain. I think we're past the point of companies just trying AI just for the sake of trying AI and because their board members are telling them that they have to.
Yeah.
But now we're actually at a point where we need real contracts that have retention, that are continuing, and that are expanding. And so if that includes an AI first product, great. If not, then you should be using it for your own operations to make sure that you are capital efficient. You're not growing your team exponentially when you could be just making them higher leverage using AI products.
I hate to think of a travel company being told to use AI by their board members. I mean, that seems like kind of a crazy dynamic, maybe. I
think we're seeing that across all enterprises, right?
Yeah.
And so more on the operational side, you should be leveling up, you should be using any of these LLMs either for faster generation or for, just efficiencies kind of across the board.
Is there therefore a reticence to use the technology, do you think?
I don't believe so. You probably have better insight than me, but I don't believe so.
Okay.
Yeah, I think people are pretty excited about what it could do. There's obviously fear, and I think part of that gets assuaged with education. But as it just becomes more pervasive, and to your earlier point about having AI in the name, I think I don't know what the timeline is, so don't quote me on that, but at some point we will no longer be talking about AI companies.
Exactly.
They will just be companies.
Yeah, exactly.
The same way we don't talk about mobile companies or web companies. They are just companies.
Yeah.
And the best ones will have some sort of an AI strategy, the same way that you have an internet strategy.
Yeah, probably quite quickly.
Yeah.
You would hope.
I hope so.
All right. Now, what sectors are you thinking about, over the next, let's just say 6 months? What's exciting to you?
Yeah, I think it's being largely guided by the folks who are already doing transactions, right? So with Navan going public, we're excited about corporate travel and what that means in the near term. With Klook going public, we're excited what that means in the near term, right? As you look at folks like Get Your Guide. And so those are exciting, and those have been coming for a while, and I think people have expected them.
Yeah.
And then there's the next aspects, right? What happens in ground transportation, right? That's an area that hasn't received that much attention, but then there was a big distribution raise earlier this year, which raised a lot of eyebrows.
Yeah.
And now there's more focus on that. And so I think as you look at the long tail of different things you can book on these platforms, obviously there's flights, hotels, car rentals. Now activity is becoming more and more prevalent, but I think there's a lot more to be had among these large players as far as packaging in more products, right? Bundling's been around for a long time, but true dynamic packaging, I think, is really in its early stages.
Interesting. There was a company in the UK that's just closed. It was always known as one of the first sort of pioneers of dynamic packaging, and now they've shuttered it. So, but I think it's because so many companies now offer dynamic packaging. So, to your point, Do you think that, there was a lot of talk about marketplaces, but it was more on the B2B side in the past couple of years. So where, a whole bunch of smaller short-term rental companies would come together, or a whole bunch of hotel stack companies would come together. Is that still of interest?
I think it will be, but short-term rentals has faced, it had a huge tailwind, obviously, during COVID that had to pull back a little bit. And I think it's trying to find what the new normal is still. And so, that's one aspect. The other aspect is you've seen some large players, go bankrupt recently or over the last few years. And I think that's making people reconsider maybe their investments and think through which business models will win. Obviously, the category will thrive, but the business models that will win, I think it's kind of the wait and see for some of the investors still.
Do you think, what has happened in the last couple of months was that, it's always that hindsight being a great thing, and a lot of people saying, well, we predicted that model wasn't going to work. So was it just all too much too soon? It was the same with SPACs, right? Everybody said too many SPACs, this is not sustainable, and a lot of those models were built on SPACs. Was it predictable?
I think the difficulty with the master lease model was predictable because there's been so many players, and the one that just went under was one of the last remaining ones.
Yeah.
So I think that could have been seen. The SPAC model comes and goes, right? And I think there's nothing fundamentally wrong with the SPAC model, but the way it was utilized during the boom was maybe how it shouldn't have been utilized.
Yeah. Do you see potential for SPAC to come back?
Potentially, yeah. But to Roopak's point, we should only be taking public companies that should be public companies.
Right.
And so to use them as a financing event for a company that should not then be a public company, I think is the wrong way to go and sets everyone up for failure.
So sensibly used, they'd be okay to come back. Yeah. But then it does feel like there has been that correction in the intermittent years, that if people do use that as a vehicle, that they will use it more sensibly given what's happened.
I think that's true. Ultimately, though, there's still the stigma that comes with the SPAC model because of what we saw with so many of those players who went public through that model. So I think it'll take a while, or at least some very successful players, to bring people back to saying, okay, you know what? It's not the model. It's just the players who went public through that model.
Yeah. Okay. So it needs to shed the reputation. Let's talk a little bit about mergers and acquisitions. We've had Rate Gain, Sojourn. We've had HomeToGo, Interhome, Marriott, System. They're the kind of big ones that stick out. Everything else has been mostly tuck-in, smaller. Do you think anything bigger is on the cards?
Well, I'd also point out there's been some large players who've been acquired by private equity.
Yes.
So that's been notable, and very large private equity. To see the mega funds come into the space has been exciting. I think on the software side, you'll see it continue. I think there's been a lot of enthusiasm there. Valuation's been quite strong. I'm hopeful as rates come down and volumes come back up in travel, you'll see many more marketplace transactions next year.
And you mentioned earlier about the bigger companies, the Booking Holdings and the Expedia's used to do some of those, TripAdvisor as well. Any likelihood of anything there? Those sort of size of companies looking for acquisitions?
I really hope so.
Yeah.
I will say my conversations with them have become more frequent, and they're spending more time looking at certain deals, but I only have so much of a purview.
Yeah, no, fair enough. Anything you're seeing there on that front?
Yeah, I think on the vertical, more vertical SaaS play side, there will always be room for these smaller acquisitions and these mid-sized acquisitions. As you're wedging in and becoming a tech provider for whether it's hotels or airlines or what have you, you want to build out that product portfolio and continue to offer more and more. And so there's two ways to do that. You could build it in-house or you can acquire. And so we're seeing a lot of really exciting companies at the early stages that have these point solutions. And so as those continue to grow, I could absolutely see more of those acquisitions happening.
Yeah. Okay, look, as we wrap up, always like to ask, what's your best advice for startups right now? Because it's changing a lot. The market's moving rapidly. So just give us your top line advice.
Yeah, I would say use AI to be capital efficient, but use it smartly. You don't need to go around and say that you're the first AI, whatever.
Indeed.
It may be. But there are a lot of tools out there that, as a startup, you are cash constrained. And so you should be utilizing all of the tools that you can, whether it's to generate code or to generate marketing copy. There's a lot out there that can help you build a company faster and more efficiently than it has ever been able to be done before.
Roopak, anything to add?
Yeah, along those same lines, never count on the next funding round. Always be mindful of the cash you currently have and how to operate that way, and have a plan B if that funding round doesn't come. I think historically there was such a view that that next funding round is almost guaranteed, or people operated that way, and you just can't do that.
No, true. Great. Thank you so much for joining us.
Thank you.